Everybody, heartily welcome from my side and my colleague Günther Spitzer. We will lead you to our Q4 figures for 2024 and a short outlook for first quarter 25 in the next 35 minutes. Some remarks on the setup when we are done with our presentation. When we come to the Q&A part, we would like to ask everybody to first call their names and the company they're representing and raise their hands. We are not doing any chats for reasons how to operate and maneuver through the presentation. Then I would start finally with a brief company introduction for the people who do not know us so well. Here you see the company in brief. Nabaltec is a mid-sized company in the chemical industry, and we are one of the leading suppliers for especially eco-friendly flame retardants and special aluminas based on aluminum hydroxide and an aluminum oxide, a chemically non-toxic material. We are headquartered in Schwandorf in the middle of Bavaria. And we have, in addition, 2 production sites in the United States, in Corpus Christi and in Tennessee, in Chattanooga, with our Nashtec and Nabaltec. And we have a sales representative in Shanghai, in China. In the group revenue last year amounted to 203.6 million euros compared to 200.1 million, and an operating result, an EBIT of 22.3 million versus 18 million of 2023. With our 500 employees, around 500 active worldwide, we had an export ratio of 76.6% in last year. Our sales department is supported by sales representatives all over the world to supply our customers around the globe. And we have been operating, as you see, a long time, since 1937 in Schwandorf, and have currently a capacity of 265,000 tons in materials production. Coming to our product segments, now the highlights of our figures in 2024. We had a revenue of 148 million on the functional filler side, which is about 2/3 of our total revenue. Our product range is specially ground, visco-optimized hydroxides, and fine precipitated, as well as boehmites. All are about eco-friendly materials and non-flame retardants, especially. On the alumina side, we have reactive aluminas as well as ceramic bodies, which the properties are mainly consist of wear resistancy, electro-insulation, and resistant corrosion. Our capacities focus certainly in Schwandorf with the fine hydrates and the boehmites, and aluminas, especially aluminas, where in the United States we manufacture solely flame retardants materials made out of aluminum hydroxide. Our raw materials consists mainly from aluminum hydroxides and aluminum oxides, which we feedstock around the globe, but especially for Europe, out of Europe, and for the US from Brazil, and as well from United States of America. If we look at the segments, it's as well, you see now here very diversified application fields. Our biggest revenue supporter is definitely the wire and cable market, with 57% in 2024, where we supply majorly, as I said, the halogen-free wire and cable market. And behind that are especially data, communication, and energy cables, and other goods where we have focused. In the battery field, which accounts 50%, you'll find our products boehmite and visco-optimized, We still see here a little bit of a differentiated picture, as the demand momentarily for boehmite declined significantly last year to the situation in China. Various sales on visco-optimized hydroxides continue to rise rapidly. If you look at the specialty aluminas, it's a total different field of application. Here, there is an almost even split between the refractory industry and the technical ceramics. What's behind there is typically the refractory industry is cyclical and linked to the steel materials, where the technical ceramics is various application fields, like you can see in the examples from ballistic ceramics, where tear protection, catalysts, polishing material, ignition spark plugs, etc., etc. Of course, the refractory industry is momentarily the issue in the market, where we have a lot of problems due to the energy crisis, which was one of the major problems for the declining in this segment. Now we're coming to the Q4 highlights overall. As you can see, at the end of the last 3 months, we had a total revenue in the group of 45 million, euros, which increased to 2.6% compared to Q4 in 2023. Despite this increase in sales volumes of around 12%, compared to the same quarter of the previous year, revenues rose by 2.6% due to the lower sales price and changes in the product mix. The operating EBIT, as you can see, amounted for 5.4 million euros, which is 3.4 above last year's figures. The margins, as a percentage of our total performance, increased by 12.2%, which is quite amazing in the fourth quarter. A good demand, especially for the visco-optimized hydroxides, and significant higher other operating income compared to the same quarter of the previous year were the drivers of this earnings performance. Other operating income of 2.6 million includes currency gains of 0.8 million, subsidies of 500,000, and income of reversal of trade payables of 0.6 million due to the status of limitations. As you can see, the earnings shares per share amounted at the end at 0.36 cents per share. The net debt status was also very good. At the end of the day, the liabilities came in at 90.9 million euros, were offset by a cash and cash equivalents of 86.5 million as of the reporting date of December 31st. This brings the group net debt to an amount of 4.3 million, excluding fixed terms deposit of 15 million, which normally you should add into the cash. Coming to the segments, especially here, you can see the functional fillers. In particular, you see that our segment revenue increased by 4.7% in the fourth quarter compared to the previous quarter last year. Here, especially the sales increased by amazing 15.6%, while prices in the product mix fell by 9.4%. So you see, we had a little bit of a pressure on this side. In addition to the continued good demand of especially the fine hydrates in Europe and USA, contributed by the wire and cable market. Here, I can say especially the data communications, which saw a revamping. Also, our visco-optimized hydroxides for the battery applications. Here we're talking about thermal management and gap fillers in 24, saw a good strong increase. boehmite recorded a significant drop in revenue by 60% in the fourth quarter compared to the previous year due to the difficult and highly competitive market in China. Looking at the EBIT, absolutely, the functional fillers product segment improved 4.6 million in absolute figures from 4.6 to 6.1 in the fourth quarter. The EBIT margin incredibly rose to 17.8%, up from 14.2% in the same period of last year, and up 13.5% in the first 9 months compared to 2024. Strong revenues in the fine hydrates and visco-optimized product areas are the key drivers for the excellent margin development. In addition, significantly higher other operating incomes, we have to mention here, of 1.5 million supported our result in the fourth quarter compared to the fourth quarter of last year. Improved cost positions, especially of raw materials, energy and maintenance, offset the price reductions which we had to cope with on the market side in 2024. Due to a weak demand, boehmite sales were only in the last quarter at about 600 tons, and the sales volumes of the US subsidiaries are further improving. That's good news on this side compared to the last year, but Nabaltec is still posting a negative result. In the fourth quarter of 2024, Nashtec revenues here accounted for around 14% of the segment revenues, whereas Nabaltec for around 4%. If we look at the capex in the functional filler segments, you see quite an increase of 8.45 million. This brings capex in the functional fillers product segment up to 25.8 million in 24, where 8.2 million are attributable to the boehmite capacity expansion we will finish this year and start commissioning by the middle of the year, and 12.9 million euros for the visco-optimized hydroxides, where we start now our major expansion program, finishing by mid-2026. Now let's switch to the specialty alumina segments. Here we have a total different picture. I already anticipated due to especially driven crisis in the steel market. At minus 3.1%, the specialty alumina product segments remained below the previous year revenue in the fourth quarter, and with 17.6% significantly below the previous quarter in 2023-24. There is still a lack of, as I said, impetus, particularly from reactive aluminas, which is a major part for the high value-added products in the area of refractory steel. The high value-added product and also reflects, of course, the impact on the margin in this segment. Sales increase, volumes increased 4.3% compared to the same quarter of the previous year. The EBIT margin in the specialty aluminas product segment is negative for the first time this year by minus 0.6%. What was the reason for this is majorly the increased raw material prices and maintenance costs had disproportionately a negative impact on the fourth quarter especially. There are overcapacities and weak demand in the market, which impact both sales and volumes and the sales price as well. If you look at the capex here to wrap it up, the expenditures, of course, are on a much lower level at 2.1 million compared to our functional fillers in the fourth quarter, and 6.3 million overall in 2024. Here, more than half of that amount attributes or relates to our expenditures for the general overhaul of our kilns, which we had several times announced in certain conferences and one-on-ones in conference calls. Now I would hand over to Günther Spitzer, who will guide you through the profit and loss statement, as well as a balance sheet and the cash flow. Günther, you're welcome to take over and for your presentation. Thanks.
Thank you, Johannes. Let's continue with the profit and loss statement of the group for the 2024 financial year compared to the previous year. Our revenues in 2024 increased slightly by 1.7% to 203.6 million compared to the previous year. In relation to our sales forecast for the whole year 24, with growth in the range of 2 to 4%, we are slightly below this range. Sales volumes increased by 8.8%, but price reductions and a changed product mix led to a 6.5% decline in the average price in the 2024 financial year. The biggest disappointment in the past financial year was boehmite, with a drop in revenues of 28% compared to the previous year. By contrast, revenues of fine hydroxides improved by 8% and revenues of viscosity optimized hydroxides by 20% in comparison to the year before. Total performance increased by 2.8% to 206.8 million due to higher inventories of finished goods in the amount of 1.9 million and own work capitalized of 1.3 million euros. Gross profit improved by 4.9% to 107.1 million, a plus of 5.1 million. Despite sales price decreases and lower boehmite revenues, we achieved a gross profit margin of 51.8%, slightly above previous year. Improved sales volumes for fine hydroxides and visco-optimized hydroxides compared with lower input costs for raw materials, auxiliary materials, and energy were the basis for the solid gross profit margin. Furthermore, an increase of 1.5 million euros in other operating income compared to the previous year improved the result. EBITDA increased by 3.2 million euros year-on-year to 34.2 million, which corresponds to a good EBITDA margin of 16.5%. Personnel expenses rose from 38.2 million in 2023 to 40.1 million in 2024, mainly due to the tariff increases of 3.25% at the beginning of the year and again in September 24 of 2%. The personnel cost ratio is therefore 19.4% compared to 19.0% in the previous year. The expense ratio for other operating expenses fell from 16.3% to 15.9% due to lower maintenance costs, and the depreciation ratio fell from 6.3% to 5.8% of total operating performance. Accordingly, the EBIT margin improved from 9.1% in 23 to 10.8% in 24. In terms of the segments, functional fillers recorded an EBIT margin of 14.5% and specialty aluminas of 1.4%. Earnings per share increased by 24.6% to 1.62 euros. We propose a dividend for the financial year 2024 of 29 euro cents per share. Now I come to the balance sheet at the end of the 2024 financial year. Total assets increased by 17.4 million to 298.3 million compared to the end of 2023. This was primarily due to an increase in property, plant and equipment of 21 million to 140 million, including assets under construction of 41.5 million. Which reflect our extensive ongoing investment program. Other non-current assets amounting to 15.6 million include a fixed-term deposit of 15 million with a term of 2 years. At the end of 23, there was a fixed term deposit in the same amount, but with a remaining term of 4 months and therefore reported under other assets. Inventories decreased by 3.2 million euros to 47.9 million. This is a result of the significant reduction in raw material inventories by 6.6 million. Compared to 2023, cash slightly increased from 86.0 million to 86.5 million. On the liability side, equity increased by 11.4 million euros to 153.2 million. The equity ratio improved to 51.4% and reflects a solid balance sheet structure. Non-current liabilities of 125.9 million include provisions for pensions of 31.4 million and bank liabilities of 90 million euros. The average interest rate for liabilities to banks was just over 3% in 2024. Current liabilities increased by 2.7 million and include higher trade payables of 2.2 million and higher accruals for personal expenses of 0.5 million compared to the end of 23. A short look to the cash flow statement of the group. Cash flow from operating activity of 35.2 million increased by 18.7 million compared to the previous year. In addition to the improved operating income, this was mainly due to working capital effects, such as the reduction in inventories by 3.2 million and the increase in trade payables and other payables of 2.7 million. After deducting payments for investments of 32.1 million, free cash flow amounted to 3.1 million euros. The investment of 32 million in 1 year are the highest in Nabaltec's history. It should be noted here that these high expenses were financed entirely from the operating cash flow generated. The cash flow from financing activity includes a dividend payment of 2.5 million, interest payments of 3.5 million, and interest income of 2.5 million. Cash amounted to 86.5 million euros at the end of 2024. So far, the figures for 2024, and for the next slide, the outlook for 2025, I will give the word back to Johannes.
Yeah, thanks, Günther, for your good look into the profit and loss statement and balance sheet, as well as the cash flows. I would give you now a short and brief outlook on our Q1, on our figures sorry, I'm in the wrong slide here, for the 2025, as we already have announced it through all the media channels. As you can see, we are cautious in the year started in the year 2025 due to the fact that demand continues to be characterized by short-termism and still a high volatility. For our most important product areas in 25, fine hydroxides and visco-optimized hydroxides, we can state that the demand is good to very well in the first few months of 2025. Based on the economy and industrial specific environment, as you have all experienced, we expect a revenue growth in a range of 3 to 5%. On the earnings side, we expect an EBIT margin in the range of 7 to 9% caused by this specific environment. The lower EBIT margin takes into account higher gas prices due to the fact that our long-term gas price contract has expired last year, and also the uncertainty of energy prices right now for gas and electricity. As we mainly purchase these two components on the spot market, and so we are exposed to a higher volatility as well. We will also see a higher personal costs. As you have to know, we are unionized, and the tariff says by 1st of April this year, we have another increase of 4.85% for the staff in Germany. And by the mid of the year, we will see a high depreciation kicking into the capitalization of our investments on the fixed asset side. If we move forward now to the Q1 figures we have reported, and I want to remark here, we just highlight a few figures as we reported our preliminaries, and want to be patient here to give not more deep inside view, as we will report on the 22nd of May, which is already in 3 weeks from now on, then our Q1 figures in depth. But what we can say, the revenue came in at 54.7 million. So we see a slight improvement compared to the previous year's figures. What we can state here, we still have a very good demand for most of the products in the segment functional fillers. In contrast, here we see a further decline on the segment of the specialty aluminas. Revenues in the functional filler segment increased by 4.1%, as you can see, while in the alumina segment we still have a decrease of 6.1% compared to the Q1 of the previous year. The EBIT margin overall came in at 7.5% in the first quarter. What was this caused by? We saw quite higher costs of energy, particularly on power and gas in the first quarter. And that had, of course, a negative impact on the EBIT as well. As I already remarked, we will publish our Q1 figures in depth on the 22nd of May 25. At this point, we are through our presentation, and I would now ask the audience or open the field for Q&A session. Please, if you have questions, shortly introduce yourself by name and company or institution, and then we would go step by step through your questions. Thank you very much for your attention, also in the name of my colleague, Mr. Spitzer. The podium is yours now. Feel free to have any answers on the Q4 figures as well as the preliminaries on Q1.
Konstantin Wiechert here from Baader Helvea. Can you hear me? No, I think.
Sorry, I didn't.
Yes,
I was on mute.
Yes.
Okay, perfect. Thank you so much. Thank you so much for your presentation. A couple of questions maybe from my side. First, on maybe the tariffs that we fear about the US. Maybe you can touch a bit on what you expect will happen over the midterm in terms of maybe your view, whether there will be an agreement with the EU, or if you expect, in your view and in your guidance currently, that the higher tariffs would become effective after this 90-day pause. And then in addition to that, as far as I'm aware, with your Nabaltec, you have already a relatively high utilization or good utilization in the US asset, and you are expanding your capacity in Schwandorf for the hydroxides. Is there still enough capacity in the US to grow maybe through the next 2-3 years? Or do you need to export more from Europe then also to the US, which would be then faced with tariffs? Maybe these are the first, and then I come back for another question.
Yeah, thanks, Konstantin. For your first two questions, we can make the tariffs short. Our industry is, and this is the good news, are completely exempted by the tariffs. So the US, as you might be aware, had a long list of also chemicals which were excluded, and aluminum hydroxide as well, of aluminum oxide, is from this tariffs fully excluded. So there is no direct impact. So all the goods which we import from Brazil into the US, which we would, if we bring goods from Germany into the US, is not levied with any taxes or tariffs. Coming back indirectly, what the tariffs do is hardly to explain or to understand momentarily, because we are in a long value stream, or and if you look at our downstream users or consumers, how they are affected again, like the cable and wire manufacturers who might export cables into the US, I can momentarily not really give a clear answer. Up to now, we do not see a direct impact. Of course, there is a 90 days exemption now where they negotiate, but if we see something perhaps in the second half. The same with the tariffs is valid for the United States as well, because people ask us always what happens in the United States. I give you, or the audience, always a simple example. There are a lot of goods which we supply in the US, consumer of our goods. He supplies a part for an electric part which will be shipped into Mexico. The Mexicans make the semi-finished good a finished good, and this part goes back into the United States because it will be it is a part of a car or a truck. So you can see these things where things go into Mexico coming back might be even doubled levied with taxes. This we do not have. We have no vision momentarily what impact that would be having on US industries as well, because these goods cannot be momentarily quickly produced and come back totally into the United States. This will not happen. But as well here in the moment with our Nabaltec Nabaltec business, we do not see momentarily this impacts I just gave you an example of. Coming back to expansion programs with Nabaltec, Nabaltec momentarily still has a leverage or of about, I would say, 30% where we can put on or volume in the short term. So we're talking about a few thousand tons, 5,000 tons where we can still breathe. Then we need to think about further measurements. If there is a quick, rapid ramp up in the United States for whatever reason, then we have certainly Nabaltec as a backup here, where we can export materials. And here, of course, this would contribute that there are no tariffs in our goods, so we can still have a free trade zone, ship material into the US as a backbone, so to say. In the long run, one has to look at the picture. Of course, I always say we have a blueprint how to expand Nabaltec, especially Nabaltec has a certain layout, so we already anticipated in case in the future that we can at least take more add-ons in production capacity. But this is a future contemplation here.
Okay, perfect. Thank you so much for that comprehensive answer. Just two more, if I may. One would be on the energy cost that you mentioned. If you could give some more color on how much energy cost you've seen in the first quarter, what you expect for the full year, or maybe just again an indication of your rough consumption in Germany. And then the second or last thing that I've seen, maybe to Günther, I've seen that your trade receivables came down even more, but more pronouncedly actually already in 23. What's driving this? Are you using factoring in here, or what has changed here in the invoicing?
Günther, should I ask the energy shortly? Günther, you are on mute.
Sorry, I'm mute. Yes, please. You can start with the energy.
Very short on the energy. I just give you the audience a bit of an example. Like this, the power, or overall, I have to say, our overall energy contributor in our P&L is roughly 12%, something around. Günther, correct me. In the overall, Of course, a big impact has the gas, where we lost the tailwind when we had the contract expired. Momentarily, the price is at 44. It came down 45. We were more at the 50 euros per megawatt. We see in the second quarter now a drop. We looked at certain pricing where we can so-called hedge or secure, which we partly did now for 3 months for 50% at a much lower rate. So we will have a certain cushion here, smooth out. Electric prices also came down significantly. We were in the first quarter far above the 110 euro per megawatt line. Now it dropped significantly. And if there is a good window, we also try to at least secure a certain percentage. So if you ask if we can smoothen that off in the next 3 months for a certain part, we will see a little bit of a tailwind, so to say, or a compensation what we had burden on the first quarter, so to say, with the energy. So these are the two components. Our third component is the steam. The steam is, in terms of volume, one of the biggest impacts, but we have here a secured price with our neighbor, the waste incinerator plant. So this is settled off. So this is a little bit of an improvement on electricity and gas, hopefully for the next 3 to 6, 7 consecutive months. On the trades receivables, Günther should say something here.
Yes, of course. Thank you for the question. The trade receivables were nearly at the same level of last year. What you can see here in the presentation in the balance sheet are the receivables and other assets. And there's a down of nearly here 16 or 17 million euros. Includes the fixed term deposit in 23. At the end of 23, here the fixed term deposit in the amount of 15 million euros was included.
Okay, perfect. No, I think I was asking about the trade receivables that came down to just 600,000 something from 1.4 million,
of course,
which seems very low in terms of sales.
Oh, okay. It's very, very low in terms of sales. As you know, I think we do, of course, factoring, and the purchase rate of the factor was very high, also end of 23 and end of 24. So around about 95% of our revenues are purchased by the factor.
Okay, perfect. Thank you.
Any further questions, Konstantin, or?
I'll let others go first now.
Okay. Yeah. We are good in the timing, so we have a few minutes. Mr. Sandher, Christian.
Hi, everyone. This is Christian Sandher from NuWays. We just spoke a bit about the input costs, but you haven't really mentioned raw materials, so aluminum hydroxide, alumina. Can you give an idea of what prices have done on that side?
Yes, we see an overall improvement if you look year to year from 24 to 25. So that's a good news. What we had in particular, as we had some index pricing carried over from 24 last quarter into the assets as they were judged into 25, especially on the alumina side. Here we had a contract which was partly indexed, and as some people might be aware of, the SGA, the so-called specialty smelter grade alumina price, came in very high in the last 3 months of the year 2024. This has now totally settled. I just give you an idea. The price was at $680 in the spot market for some particular days, was really high. It even ranged 700 for 1 or 2 days. And now it came down substantially 350, 360 last, it was yesterday or 2 days ago. So this is the good news. And as we mostly now have settled our contracts by the whole consecutive year 2025 at a much lower price, we will not see any impact again on the side of raw materials momentarily.
Okay, next question is on the sales mix. Last year, volumes overcompensated for weaker prices. What's your expectation for this year, or what's baked into the guidance?
We will see a certain, hopefully a certain, and as I said, I don't want to anticipate too much for the Q1 figures, but we certainly push again on the price side, I can say, for the 2025 figures. Of course, as you might be very well aware, sometimes contracts may not allow because they go over the year. Some contracts are first quarter to first quarter. Some have a strong cut at year end, but we are optimistic that we see some improvement here throughout the year, which definitely we did not see yet so far.
And then a third question on the competitive landscape in Europe. At the end of last year, it became public that I would say your main competitor in Europe, Martinswerke, they are undergoing, I think, again, a restructuring phase. They had to let go quite a lot of people. Do you see this as an opportunity to grab some market share, or do you see any other opportunities in this scenario?
Yeah, good. It's always hard to speak about competitors. We know that, and they announced it publicly, that they had launched or commissioned this power plant built on gas. So compared to Nabaltec, for the audience who do not also familiar with Nabaltec, we get supplied by a waste incinerator plant. The waste incinerator plant burns, of course, waste. That's its originate objective. And as a byproduct, they give gas. So we give the steam to us, which has a certain advantage if you make steam out of gas. So this is certainly gives Martinswerk a different cost structure. They came from coal, but I cannot talk if this has something to do where they have to work also on their personal cost structure. What was a good thing last year, Martinswerk Huber, as the American mother company, announced publicly a price increase between 5 and 15%, as contracts may allow, which gave us some support that we can also move. Normally, we were always a price first mover. This time, we were reluctant, and this gives us certainly a certain room to move also here, as the pressure on Martinswerk has risen due to these circumstances I just mentioned.
Okay, great. That's it for now. Thank you.
Any further questions, Konstantin? Konstantin, you raised your hand. I don't know. Is there any questions? You are still on mute.
Sorry, my phone locked, and quite a mess. We got an update here, and that's very terrible. Let me see if there's anything open. Maybe you could just also talk a bit more about what I've seen is that particularly the resin and dispersions sales declined notably over 24. It seemed like this business already was kind of in a downturn over the last maybe 22, 23 already. So what is driving this year, and how should we think about maybe all the other segments except for the wire and cable over 25?
Well, the resin dispersions, it might fluctuate a little bit. For us, it's as I said, it's not a strategic market. It's a market coming out of the product mix. So resins and dispersions is a broad field. Sometimes a little bit more price sensitive than others. and I think it's fluctuating. We cannot really see a trend here. I don't know. This might have been seasonal, or there might have been a shift. So I wouldn't highlight too much on that. If you look at the other application fields, of course, the battery market is for us the opportunistic market as well, led by visco-optimized and boehmites. As I mentioned before, the boehmite is momentarily a bit under pressure due to the highly competitive landscape in China, and the visco-optimized due to the fact that everything is produced in China with the separator, which is directly linked to our boehmite, because we have this coating material on the separator, and the separator is again linked to the cell manufacturing. Everybody can understand why this market is in a difficult situation momentarily. We have to import or export everything to China in the periphery. Our market in China momentarily is practically on halt. We did not unintentionally compete with these price erosions. We just saw one of our competitors has published figures as Stone. That's no secret, and they had a loss at the year of end and a loss in the first quarter, even due to higher revenue increases. So you can see the disastrous situation this industry has, and we practically withdraw from that market. So our major supplying field is now Japan and South Korea in the periphery. And of course, we are still lagging behind in Europe. In Europe, we have separator manufacturers existing. They still build up, but we still wait for the cell manufacturers to follow. On the visco-optimized, the situation looks totally different. Visco-optimized is linked to thermal stability, thermal management. These are especially the so-called gap fillers, and also the adhesives, where our powder comes into an adhesive, a glue, where the sockets, where the cells are glued to the socket of a battery. And this market is geographically not so dependent on China. A lot of OEMs who build their batteries, who assemble their batteries, they buy the components, assemble the batteries, like BMW, Mercedes, whoever you want to name, do it on site here in Europe. And because they have their own technology, and of course we profit from this move, as we are here in Europe as of course one of the first movers on the one hand, and on the other hand we are producing it on site in Germany and have a close vicinity to the OEMs. That makes it an advantage compared to China. This is a momentary situation. Wire and cable, I don't need to say anything momentarily. That's a fairly good. And the same picture for the boehmite is, of course, and all the battery, the e-mobility is valid for the US momentarily. Everybody knows what the new Trump administration has said. Drill, baby, drill. Electric is pushed back. I still will see. I'm optimistic that the battery business, the electric car, will have a revamping in the next 5 years due to the efficiency of this industry. And a lot of industries or car manufacturers have still a certain focus on this e-mobility platform.
Agree. Thank you so much. That's all from my end.
Christian, I don't know, is your hand up again, or was it from
It is. I have a follow-up question on the boehmite topic. You just said that you would expect demand to come back over the next 5 years. So that's still quite a lot of time. I mean, you're in the last stages of significantly expanding the production capacity. In the meanwhile, until demand comes back into significant ranges, are you able to use the production facilities for other products, or is it basically just sitting around and waiting for boehmite demand to come back?
A very valid question here, and I certainly was waiting for that to be asked also out of the audience. Of course, I think one of our strengths, and it shouldn't sound arrogant, is that we always come from a technology vision. We know our technology very well, and with this boehmite plant, we have a long-lasting good expertise in this technology. And the good thing is that we can use this technology as well for our fine hybrids, for our really cash cow on the cable and wire industry. So what we're going to do, and we also have some other products we can use for different applications where we still have some ideas how we can move forward. So we will not sit there, twiddle our thumbs, and let this capacity be rotting here. No, we will use it sensibly and fill it up also with wire and cable materials, fine hybrids especially. So we can switch immediately. We already undergo a certain way how we can fill up now momentarily, and of course we can alternate then. So we have certain ranges where we produce boehmites, and then we switch for a certain period of time to fine hybrids and develop the market there.
Would you have to spend any additional money on switching? No. Okay, so you can just basically turn on the switch, and you produce a different product.
Absolutely, okay. As you name it.
Okay.
That's a good news here.
Perfect. That's understood. Thank you.
That's it. Thank you, Christian. Any further questions from the audience? I cannot see any hand raising. So if this is not the case, then I would wrap up with a warm thank you for your patience, for the questions. And due to the fact that we were a little bit late in reporting the Q4 and annual report, we will see you shortly on May 22nd in shortly 3 weeks again to report more elaborately about our Q1 figures 2025. Thanks again. And I wish everybody who joined our meeting today, our earnings calls, for being so patient and attend the meeting. Thanks, and have a good day and a good week. Also in the name of my colleague, Günther Spitzer.
Yes,
thanks
thank
again.
You.
See you in 3 weeks. Bye-bye.
Bye.